mainstreaming biodiversity within the organization, financial or otherwise. So I'm particularly excited today because we are really beginning to see many leaders in this space, financial and corporate, assessing their relationship with nature and disclosing that relationship. And so it's absolutely fantastic to have many of those leading that charge with us. First of all, Emily McKenzie, Technical Director from the TNFD. Dr. Varsha Vijay, Technical Director for SBTN, Marine de Bazelet, Group Advisor for Natural Capital at HSBC, and Dr. Vian Sharif, who is the CEO of Nature Alpha and the Head of Sustainability at FNZ, as well as a member of the Task Force on Nature Markets. Hopefully Gilles Kleitz will also be joining us soon. In terms of the focus of this session today, there's really two aspects that I'm hoping that we're able to hear more about. And the first is how assessment and disclosure is already possible, and how that gives us a lot of cause for optimism, but nonetheless how we need ambition on Target 15 and in other areas to really drive that systemic change across the entire financial system. Okay, and so without further ado, I'm going to kick us off. We're going to have 2 rounds of questions, and the first one on that theme of how disclosure is possible today, I'd like to kick off with you, Marine, and ask you, at HSBC and the experience that you've had, if financial institutions want to begin the setting targets for biodiversity and designing disclosure methods, where can they begin? What would your advice be?
Well, thank you, Grant. First of all, for financial institutions to start, they need to understand why it matters. And why it matters, why nature loss matters, but why it matters to them. And meaning, what are the transmission channels of nature loss within the real economy? And then the financial institutions sector will be able to understand what is the materiality to them of those transmission channels. So, keeping in mind that logic, how do they do that? How can they start concretely? I think there's a very easy way, which is actually to use the Anchor database. And so before that, why does it matter to them? One way to come into that topic is maybe through the net zero lens. A lot of us, financial institutions here in this room, have committed to be net zero for our finance emissions, where there's no net zero without hitting nature loss. Then how do we assess what nature loss means? And Anchor can be quite helpful for that, to actually map, not only that, but actually screen your portfolio and understand what is its exposure to ecosystem services and impacts on nature. So it's going to give you a qualitative assessment. We've done it for a third of our large corporate loan book, and the results was to show that the 3 ecosystem services that HSBC loans book was the most exposed to were all water related. So an exposure is not a risk. But in itself, that's quite striking. That was a little more than a year ago. We were really starting on nature, and seeing that was like, okay, water, well, we've never really looked at it. How are we going to do that? And we've done, thanks to Brent, a great work with CISL to actually deep dive on a little sample, a portion of our loan book, and try to understand what is the potential financial impact on that part of the loan book. A material one. So we've, CISL came with a scenario, a realistic scenario, which was 3 months water curtailment in a specific region in Southeast Asia. So that's a realistic one. It copies in a way what happened in Cape Town. And what is the impact on our portfolio of heavy industries? And so, I mean, you get the point. If there's water curtailment for a couple of months, the priority will go to agriculture and households, not to heavy industry. So we've run our stress test tools on that specific real portfolio using that specific scenario. And what we came up with is that the credit risk rating of that portfolio actually decreased by 25%, that 30% of the companies in scope moved from investment grade to speculative. And for the one that understand what it means, I mean, the risk-weighted assets actually increased by 20%. Well, that shock from a realistic scenario was helpful enough to say, okay, I mean, nature loss have a real impact. We haven't looked at them yet. Certainly, it already happened on our loan book. We need to better understand, and that's why we joined the TNFT.
Thank you, Maureen. So I think that particularly what you said at the end there, and the materiality with multiple notch downgrades in the portfolio, in your actual portfolio, and how that's really driven the engagement internally, I think represents a really good use case for how just taking that first step can really get the ball rolling to the wider point of wider assessment and disclosure. So again, speaking of the piloting process, Emily, I know that you're been beginning that work with the TNFD in the various versions. So yeah, please do tell us about how that's going and the framework.
Thank you, Grant. So it's been really exciting to be part of this recognition of the importance and materiality of nature-related risks, and to see the market taking action, seeing the role of what they're doing, which is creating a risk management and disclosure framework as a way of significantly shifting global financial flows away from activities that are harming nature and those to activities that help it thrive, the role of that. And it's not only a disclosure framework, it's a risk management framework, a framework for improving decisions. A huge emphasis is on that. So of course, disclosure and transparency plays a critical role in the change we need, but also for companies to take action. So what we're building is a global integrative framework, which means it can be globally applicable, and it builds on the best of what's out there. And it's a pleasure to be sitting next to Varsha, the technical director of the Science Based Targets Network. That's one example of a group that is moving on science-based targets for nature that we incorporate into this global integrative framework. So we're not recreating the wheel, we're building on the best of what exists, including on the best science, so drawing on our knowledge partners from credible science organizations and also from the standards bodies, building on existing voluntary and mandatory standards. We've drawn on metrics that are already out there, but also inspiring them to have greater consistency and comparability. So as our sister organization, TCFD, becoming that kind of integrator and something to create greater consistency. And we're moving at pace. We've already, the task force, and our pleasure to sit next to Maureen as a member of the task force, has already put out 3 beta releases. We're following an approach akin to software, so putting out material regularly. And the reason to do that is to get feedback. So anyone in this room who has any perspective on the TNFD framework can provide feedback right now via our online platform. And also really committed to our other principle, as well as being science-based, but to be practically implementable. And so we're emphasizing pilot testing. We have 130 organizations already pilot testing the framework, and excitingly, a large proportion of them are also pilot testing SBTN's methods as the targets piece of the framework. So we can learn by doing. So huge momentum, hopefully gets all organizations able to act now in a way that makes a difference for the goals we have for nature that we're all here for today, and also ramps up ambition over time.
Great, thank you, Emily. And I think that you highlighted earlier on in your comments that ultimately the objective here is to integrate nature into decision making. And what we have in terms of assessment disclosure are the first steps towards that. And you mentioned there the link to SBTN. So, I mean, Varsha, would be really useful to understand as an implementation tool and as a target setting tool, how it's complementary and what you're doing specifically.
Thank you, Grant. Thank you, Grant. I think this is such a good context to kind of hear all these perspectives in sequence. So yes, SBTN has been working very closely with TNFD, and I think what's really exciting about the development right now of frameworks to address nature impacts is that we are focused on what can be done right now. We know the science is clear that action needs to happen now, and that's urgent. And we also know the need for coherent and complementary guidance. So just to start from kind of the beginning, Science-Based Targets Network applies an environmental and societal materiality perspective. So at the very outset, a financial institution can utilize our guidance to assess materiality from those perspectives. So what impact do economic activities cause on nature? And that's an important complement to the financial materiality perspective. That can be done at the portfolio scale, and then utilizing that initial assessment, financial institutions can drive more granular assessments and action by companies to first assess all of their economic impacts, which they can go into in greater detail, utilizing these methodologies, and then really crucially move from that assessment phase, which is important to understand what's happening now, but through to action. And that action that we emphasize are science-based targets. So these are targets that are measurable, actionable, and time-bound. And most importantly, in kind of understanding the complementarities but distinction between nature and the climate space, they're very spatially explicit. So that means that this is happening at the site and location scale, where now companies are taking actions directly to reduce the impacts of their activities. In thinking about that kind of cross-scale collaboration between financial institutions and companies, it's clear that the tools are there now. We're looking forward to the first release of our methodologies in Q1 of 2023, which will really enable the first companies to take this action. But what's exciting is that we're hearing that companies internally, FIs, are already starting to utilize this guidance to think about what they can do. And it's clear that these different actors will have to work together and respond to the kind of guidance of the Global Biodiversity Framework and other national policy mechanisms if we are actually to see change on the ground.
Thank you, Varsha. Thank you, Varsha. Thank you, Varsha. So I am picking up on there what you said about the methodologies being in place, and we heard from Maureen about some of the results of applying these methodologies in terms of the credit downgrades. I think the missing piece of the puzzle so far has been the data that drives these methodologies, and then the resultant downgrades. So, Vianne, would you be able to tell us a little bit more about what's happening on the data front and how it's being utilized?
Grant, thank you so much. And thank you very much for having me participate in such a distinguished panel. I think we've all heard about the debate on data. Is there enough data? Is there too little data? How do I engage with this data? And this is also a challenge that we have been thinking about for several years now. Delighted to see how much the Task Force for Nature-Related Disclosures has really catalyzed and accelerated a general move around how important and material understanding our impacts and dependencies on nature is, following the footsteps of the Dasgupta Review and other very important reports. So I think it's safe to say we understand that there's something we have to do here. So if I may, I share three talking points with you on the area of data. The first is that we stand on the shoulders of giants in terms of the science that's been done to help understand what data is available. ENCORE, science-based targets materiality, the incredible stores of data that are being held by the likes of IBAT, IUCN, and a whole set of up-and-coming data providers, which no doubt you will have met. However, how you bring that together is a tech challenge. In some cases, if we're going to make this data scalable and usable for financial services users, then if we think about how data is being consumed by financial services users at scale, they're engaging with data providers, they have workflows that technology enables to happen, we have to have consistent data, and we're about to see the next revolution in data and insight and transparency as geospatial data
marries with traditional data that we've all been used to. That's going to require not only an incredible amount of tech to get that up and running, but also it's going to require amounts of storage that we've never seen before. So this is very basic infrastructure. But what I will say is that the data handshake between tech and the underlying data has been made. And that's a hugely exciting development, I think. So that's the first thing. The second thing is that we have to understand that equity markets and corporates, obviously, this is very important to understand how we can apply nature risk and biodiversity impact data in this context. But also, this needs to be consistently applied to debt markets too. Debt markets are actually much larger than equity markets. So how do we start to make sure that the consistency happens? And again, the technology is enabling that to happen. The infrastructure is there. So this is also good. The final thing is that if you wanted to, you could get started tomorrow. And the reason I say that is you have entry points all around you. So, for example, you have the incredible work done by the TNFD's Data Catalyst. They have the tool catalog that you can engage with. Have a look at the data that's available. You can ask your traditional data providers who are already giving you ESG data. It's happening now. They have got data which can enable you to start to engage on these issues. And then take a look at some of the incredible repositories that are available to you in the likes of IBAT, IUCN. These are databases you can engage with, sometimes on a free basis, sometimes with a small contribution to updating that data. It's absolutely there now. There's no need to wait. We can start tomorrow.
Thank you, Vian. I think a very powerful message. And you mentioned that IUCN as one potential source. And so handing over to Gilles, with your deep experience there, I think over the many decades you've worked in this topic, you've really seen again how the types of assessment and disclosure we're talking about today have taken place, in many different ways in many different places.
Sure. Absolutely, Grant. Thank you. I think the few points I want to raise here is for a public development bank working on debt, on equity, a bit on the public and private sector in the developing world, and as a group we're committing about 12 to 13 billion per year. What sort of tools basically have we used in the last 5-6 years to progressively align to nature positive, where we feel now more and more confident about stating? Well, historically, the first tools that we used were safeguards, improving the bottom line. And there is obviously a number of international standards with the World Bank and IFS, etc. But we moved a bit beyond in really understanding what we just can't finance anymore, because it is about not financing some of the worst and most destructive activities for biodiversity. The second tool that we used is really getting our positive right, more precise, more robust, i.e. qualifying the biodiversity component of sectoral, bankable activities: green agriculture, nature-based solutions, green cities, green infrastructure for coastal management, green climate solutions, etc. And making sure that what is project per project in these activities is indeed bringing a net gain in biodiversity. The metrics are there, the data is there, it's sendable, and we've managed to actually do that. From there, we were able to set quantified, ambitious, and realistic market-based targets. So that's how we actually decided to set, a target of 1 billion biodiversity co-benefits by 2025, sector by sector, by aggregating what is the demand of our clients, governments, local authorities, private sector, and so on, in which sectors, in which subsectors, etc. And we came up with that goal. And that's key, and it helped us as well set quantified objective with climate convergence. 30% of our climate finance is biodiversity net positive, and set ambitions about the balance between conservation finance, i.e. DAC indicator 2, really conservation of ecosystems, something that the private sector doesn't really finance, and it's really in our mandate as public banks to finance that, especially in the South. And the rest, 70% of our biodiversity portfolio, again, which is mainstream bankable sectorial activities. And that's one strong message I want to convey here, is that it is a bankable business, you know, and we've sort of proven it. A key other step is strengthening the capacities of your staff. First, you start with your ESG team usually, and then you move on to a risk team that embraces biodiversity, then to a proactive market and a sort of investment team that looks for nature positive investments and so on. They don't happen like this. Sometimes they really need to be accompanied and supported. That's absolutely important. Another step is really important, is raising in your, you know, in your financial institution, in your board, if you have a public shareholder or not, you know, raise the political profile of biodiversity. This has been key in the last 10 years. And unless the CEO of your establishment comes to this COP, you know, together with the climate COP and so on, unless you have ministries of finance, unless, you know, things become are difficult. So it's really something that needs to be worked. Refining accountability and reporting is absolutely key. And again, when we started 5 years, 6 years ago, it was very, very blunt. And slowly we refined, you know, exactly what we account as biodiversity finance and so on. It's becoming more robust. We've been criticized, we've been transparent, it's been about disclosure and the virtual circle, you know, of transparency, where you become, that's absolutely key. Integrating biodiversity in risk assessments. So now we have an understanding of what sectors, what geographies, what financial instruments are linked to ecosystem degradation, financial risks, basically. More and more, we have country profiles, client profiles on whether they're exposed, dependent, impactful on biodiversity. That is key over our thousands of clients and the 110 countries we work with. This understanding of biodiversity risk is becoming far more practical with a strong databases and so on. I think refinancing, with all this strength that, you know, was built in the last years, now we are starting to be confident enough to face the market and say we are going to be only financed by green or impact bonds. You know, because now we have the capacity to show that if you put €1 in the AFD group, it's going to deliver nature positive impacts. And now about 50, a bit more than 50% of our refinancing, about 10 billion per year, is on green bonds and, you know, progressively SDG bonds with, again, you know, a more and more robust framework. Creating adapted financial tools for ecosystem biodiversity and green activities is key as well, in terms of maturity, in terms of grace period, in terms of you know, financial contracts and so on, that sometimes requires as well being quite creative. Through all that, what I want to say is that I think the tools and the methods are getting, you know, more robust. They're not perfect, but I think for a public finance institution, it's very possible to align. And we're going to align even more strongly if we have a strong agreement at this COP, if the very same government or shareholders, because of consistency, actually ask, you know, their financial instruments to get aligned. And this is true for public banks, it's true for public budgets, obviously. And it's true for other public spendings where there is a lot of coherence that needs to be built as well. But my main message is that it's, you know, we shouldn't wait. It's really possible to do it straight away, you know, even if it's not completely robust. Once you start, you go into a virtual circle of strong nature positive achievements. Thanks.
Thank you, Gilles. So I think there you've highlighted the breadth and the depth of the lessons that, you know, the private financial sector can draw upon. And I think that there are lots of causes for optimism. You know, one of the main takeaways for me from this COP is that we have business and finance here on a big scale, that we have exciting technology providers, eDNA and others here, and that we have government and the conservation community here on a big scale too. So I think that when it comes to the integration piece, how do we integrate those capabilities, that experience that you were highlighting? Would you be able to tell me a little bit about what causes for optimism you have on integrating these different domains and creating a dialogue, if you like, to integrate them, and so that we can really start to move the energy that we have here and the community that we have here forward?
Thanks, Grant. This is a key question. Public finance is about 15% of global investment worldwide. So it's definitely not enough, but it has really a sort of normative power, a convening power, you know, that is really strong. So one of our main way to disseminate, share, and have greater influence beyond what we do is the community of public development banks, both on their national mandates in the north and the south, both in their north to south mandate in terms of solidarity, and both in the building of their new mandate on global goods. You know, there is a more and more political asks basically on the World Bank, on the multilaterals, on development banks to actually finance climate, you know, climate adaptation and mitigation, and to finance biodiversity and transition. So what we do is actually put together toolboxes for biodiversity within these communities, you know, bilateral banks, multilateral, and so on. We try to disseminate, share, you know, all the tools and steps that I described, you know, so that it's available to all these financial institutions whose main business is impact. You know, they have to be balanced in terms of finance, but it's not profit. So it's important they have a good capacity basically to measure impact. That's one first way, and we have great collaboration with BNDES, with DBSA in South Africa, with the China Development Bank, one of the largest banks in the world, with KfW in developing this biodiversity toolbox for public finance institution with great outreach that potentially has the potential to align 2,500 billion worth of investment per year. And the other way we integrate is by participating in initiatives such as TNFD, you know, trying to bring together that community of public finance and their impact culture close to the incredible mobilization around TNFD that we really admire and would like to contribute with what we can bring, which is, you know, specific in terms of especially emerging markets, for example, and how the biodiversity agenda sort of flies basically on those markets, and as well bring this culture of impact and accountability on impact, which is really our mandate with our governments.
Thank you, Gio. Thank you for sharing that experience. And so to stick with this, your reasons for optimism, Gio mentions this toolbox and how there are so many leaders now that are really pushing. For yourself, Arsha, when people ask you about what's really exciting you moving forward on integrating biodiversity into finance, what are, you know, in terms of the next steps, where do you go first? What are the examples you use?
Yeah, thank you for that, Grant. And Jill, thank you for those fantastic examples and that experience coming from the public finance sector. I think when I start with excitement here at COP, I want to take a step back and think about the kind of conversations we've been having. We heard mention of nature positive throughout this panel, and even though we have work to do on defining exactly what that means, clearly there's enormous energy behind global goals for nature and for biodiversity. And all of those goals are focused on one kind of critical aspect, that's bending the curve of biodiversity loss. And what we mean by that is actually moving away from loss to gain. And what it takes to actually do that is change on the ground. Biodiversity, as I've said, is spatially explicit. It depends on where you are. what is critical. And there's so many dimensions. We've heard mention of all the kinds of new data being brought to bear on these questions, but then we have biodiversity at the ecosystem level, at the species level, at the genetic level. And there's so much that we can do to kind of understand where we are now in order to know what we need to do to bend the curve. So I think the targets coming out now are kind of an enormous tool to actually see that happen. At Science-Based Targets Network, we're also drawing on enormous range of expertise from collaborators. So bringing together NGOs, academic scientists, and others to say, you know, what can we do to not only talk about these global goals, but to actually address direct drivers of biodiversity loss. And through addressing those drivers, we're working in different systems. We're thinking about impacts on lands, on freshwaters, and eventually, as we develop our knowledge in that area too, on marine systems. So what gives me hope is actually the ability of a financial institution to catalyze change on the ground. And I think that that's something that we can really look forward to if we see strong frameworks in place, if mechanisms like Target 15 include targets or approaches which ask for 50% reduction of impacts, we're going to want a way to make that happen. So I'm excited that that science, that knowledge is coming together and that it's being done in partnership with those that are going to apply it. So thanks.
Thank you, Varsha. And it's really encouraging to hear your optimism with regards to the change that financial institutions can impact on the ground. Kind of thinking then about marine, the more the markets level, the existing funds that there are and the new funds that could be created to do this. I know that the HSBC has been doing a lot in this area. So, you know, in terms of your reasons for optimism, you know, what's happened recently, which is really exciting you in this art of the possible.
Thank you. I don't know if you're talking about the announcement for climate asset management to actually have an investment of 650 million in nature-based solutions, or if it's the energy policy that you're talking about, because both are very positive. But I mean, I have a lot of reasons for hope, but let's be honest, we're at the beginning of the journey. And it links to a lot of what you said. I mean, we need to connect the dots, and we need the targets, we need a lot of things. So I'm going to illustrate with some examples. Yes, as you said, Gilles, I mean, we have the sustainability-linked loans, the sustainability-linked bonds that actually are helping us to have the conversation with our corporate client on how they can, yes, drive their activity toward less harm on nature or eventually nature positive. And we've been working with the International Capital Market Association on defining biodiversity-related KPI or nature-related KPIs. Thing is that we have those KPIs, but we have no clue of if the objective that the corporate is putting itself are good or not. I mean, some are like straightforward, but other ones, I mean, we don't know. We need those targets to like make sure that we are actually de-risking, because if we're thinking about sustainability-linked loans, for example, that means that we give up potentially part of the interest rate because we think that we're de-risking it. But if we don't know if it's in the right, I mean, sufficiently in the right direction, so we need to work on this one. We also have made great progress on, I mean, with the data. I mean, you talked about that, Bian. I mean, there's absolutely a lot of data and a lot of data that are already available for investors to actually start to manage their exposure to biodiversity. So we have launched in December last year, so a year ago, biodiversity indices on the basis of the Iceberg database and with Euronext. And then 6 months later, so in June, we've launched an ETF for investors to actually manage the exposure to biodiversity loss. Thing is that the underlying data help, yes, manage the risk, but it's proxies, because we don't have the real data for corporates. We do have the real data for a few handful of corporates, because a lot, and that comes back to my point on connecting the dots. When corporates and any kind of institution will actually understand its relationship to nature, positive or negative, then we will be able to accompany the transition toward nature positive. I mean, or whatever we call it, but you get my point. Maybe last, I mean, I'm optimistic because we're already doing quite a few things, but we're in the middle of the journey. And I think one the key issue that key topic that we need to solve is actually traceability, because most of the economic activities are far from their impact on nature. And so we need to solve that issue. And it's also about data.
Thank you, Maureen. And I know this round of questions is really about reasons for optimism, but I mean, inevitably we end up talking about the challenges, but it's completely understandable, particularly on the traceability point. Conversations today about the materiality of nature loss is sometimes understated, simply because the most exposed sectors are not the most they're not the most significant part of our global economy right now. So agriculture, food, beverages, and so on. So I think around this traceability challenge, and if you like, the exposures that exist along value chains, second order risks, and so on. So coming to the data point, Vianne, again, what gives you cause for optimism on this front? What solutions are you seeing emerging?
I would say that the most exciting innovation that we're seeing in this space, which in my view is going to revolutionize transparency around data and start to unpick the models that we've used. Of course, we've used models. We use it still in climate scenario modeling and understanding the impact of our businesses on the world around us from a climate perspective. But what geospatial satellite data and eDNA, these new innovations are starting to bring to life are the ability to combine traditional forms of data, so revenue splits of products and services, the actual suppliers who are supplying companies. We can get lists of these from traditional data providers. And as we start to integrate that data with new forms of data, whether that be satellite imagery, whether that be starting to understand the locations of directly owned operations, then the locations of the suppliers to those directly owned operations, this is where we start to see incredible innovations in how we can combine those data so that we aren't just relying on models, life cycle analysis, but we can add to that and we can build on that. So for example, we've worked incredibly hard on a partnership with IBAT to be able to look at proximity data at scale, not just for one site, but for 12,000 companies. This is the kind of scale that technology needs to enable. So for me, this is, again, still version 1, but we're moving from models with incredible science behind them, and we can now start to add layer upon layer of much more transparent data to start to open up our view of what's going on the ground. And it's very complex, but it's incredibly exciting. And so I just want to leave you with one thing that does make me excited. And it wasn't actually me who said this. This came up in a panel with Mr. Harada of the Japanese Development Bank, talking about how they're thinking about incorporating nature into their risk assessment processes and their capacity building. And he reminded us of an African proverb which said, if you want to go fast, go alone. If you want to go far, go together. I guess what I'm inviting us all to do is to go far, fast together.
Thank you, Vianne. I think that sentiment is very much echoed by many of you in the room. And so I suppose that to talking about going together and the broad church that we now have as a part of the TNFD, which I think is an absolute testament to the wonderful work that you've done, Emily, and your team, talking about moving this broad church forward and how you see that evolving over the coming months. And yeah, what is really exciting you right now?
Thanks very much, Vianne, for giving me the opportunity to segue. So maybe I can talk about how all parts of the panel have been part of what excites me. I mean, I think this moving together piece has been, for me, really touching. It's been incredibly touching. I've felt that really deeply the last few days here. The momentum and the contributions of so many parts of the system. And we are, of course, talking about system change, right? So all parts of the system need to be contributing to this. And the TNFD framework is just one part of a puzzle. I mean, it's not going to solve everything. It's one part of a puzzle. It's a risk management disclosure framework. But because it's a very practical piece that many can contribute to, I think it has galvanized a lot of sense of possibility. Of course, there'll be many other parts to play, including shining accountability on that framework and increasing ambition over time. But let me be more specific of some specific things that have been exciting me over the past months and in thinking about the opportunities to come. And I'll maybe move across the panel as I do so. So with Vian on data, you mentioned the data catalyst that TNFD established. We have more than 100 members of the data catalyst. They are data providers who are actively trying to solve problems around data and analytics to mean that nobody can say, oh, I can't get started, that it's possible to do the analysis. And we've had these exciting sessions this week, data labs, which have brought the data providers together with financial institutions and corporates to say what's possible, how can I use it in real examples? And that's been really, really exciting. And then to move to marine, it's the financial institutions and corporates who are putting it into practice through pilot testing that's really exciting. And I mentioned there's 130 pilot testers. We have 60 more who've expressed interest. There are specific examples, a beverage company, an insurance company who are starting to put this into practice with disclosure. And of course, many more who are informing decision making. I had a very exciting conversation last night with a forestry company who are revising their strategy, inherently revising their strategy and saying they've had these wow moments applying this framework and this thinking to improve what they do. And some of them are discovering that nature risk is radically higher than climate risk. So others may find that there's huge alignment because for some sectors there's a lot of overlap, but some are finding really new insights, and that's very exciting to me. And then moving to Varsha and Gilles, I think what I felt is this incredible contribution of our knowledge partners, both as collaborators on specific pieces, and the TNFD framework is building on other people's work, right? So SBTN's progress has been a real privilege to draw on to help us solve the targets piece. And with AFD, drawing together, we had some exciting meetings this week with public development banks and development finance institutions who, and of course, not on the panel, but our central banks and supervisors, and our collaboration with the NGFS to get the macro prudential to match with and align with the financial institution and corporate perspective. So it's that systems change, that sense of system change and alignment and collaboration I've really felt this week. And of course, the bigger picture of what's happening with the negotiations in the context of the Global Biodiversity Framework. And again, there are many targets. The whole framework is got so much to it, and TNFD is just one part. But I feel excited to be able to show that we can operationalize Target 15.1 specifically. It is possible right now for all organizations to get started with assessing and managing nature-related impacts, dependencies, and risks. And so we can't use that as a blocker. There's plenty more for us all to do, but we can get started.
Thank you, Emily. I think that's a really fantastic note to end on, and I could try and better it, but I probably shouldn't. I think just to briefly say, at the end of the day, we have an economy which hasn't recognized the value of nature. We heard Mark talk about it earlier. And so the broad question here, when integrating nature into decision-making, really it's about integrating and internalizing nature in everything that we do. We are running to time, I'm very proud to say. So I am going to be able to open this up to the floor. There are some mics around. I hope that they're live. I'm looking over at the team. I think we're good. So if anybody has any questions, please do stand up, move towards one of the nearest mic, and very happy to field them to the panel. No? So we have the mic over here. Oh.
Does this work? Yes. Thank you for all the presentations. And of course, I think we all agree that disclosure is very important to understand the impact that nature risk can have on business. The TNFD framework does not seem to focus as much on the impact that companies have on nature. The double materiality is not fully included in the framework. And of course, within the context of the conversations here at the CBD, what we care most about is about the impact that business have on nature, because that's what's in the end going to have impact if businesses stop having impact on nature. the framework is being written by 40 big corporations without any involvement of civil society. And if there would have been more involvement, the framework would probably look different and include simple things like full disclosure of where a company is operating, include as well grievance mechanisms, for example, which are a very good test to see if a company is actually doing what it says it's doing. So I guess my question is that something that will be included in the framework? Of course, TNFD is not yet final, we all know that. So are there discussions about how to improve the framework in that sense? And also about, will there be mandatory disclosure, full disclosure of all the impacts that a company has on nature? Thank you.
Thank you very much. So the approach to materiality in the TNFD framework is flexible. So we're aligning with the global baseline, which is being established by ISSB, which has received inputs on their own position on materiality, but with the flexibility for any organization in any jurisdiction or with any preference to disclose against their own approach to materiality. So double materiality is there and impacts are there. The disclosure update that we did in the disclosure recommendations in the last release includes in metrics and targets B, disclosing the metrics that you use to assess and manage your impacts and dependencies. And I reject the lack of participation of civil society organizations. We've had conversations with yourself and with many others. We could not be more open to feedback. Anyone can provide feedback at any time. And indeed, we just published a position paper, a discussion paper on societal dimensions of risk management and disclosure, in which all the feedback that we've received has been fantastically valuable on impact, on materiality, on the inclusion of the recognition of Indigenous peoples and local communities and their stewardship role, their traditional knowledge is all placed there, and how we're improving the framework over time. There is more time for us to make further improvements, and we look forward to discussing with you and with others how we can make those continued improvements. And also on traceability. So in the last update, we also included a new disclosure recommendation on traceability, which is asking organizations to disclose the process by which they understand the sources of inputs. So understanding location is absolutely critical to the framework, which comes to where people are based and who are also relying on those ecosystem services that are affected by action. So I hope that's helpful. I look forward to continuing to discuss with you. And I don't know if Maureen would like to contribute further as a task force member.
I mean, I couldn't agree more with what you said. I mean, I'm just going to illustrate it with one of the pilots we've participated in. We are participating in 4 different pilots, so on different parts of our activities in different parts of the world. We've joined a pilot led by UNEP on the impact of natural rubber in Indonesia to our loan book. And we decided to test it on our continental Europe loan book, because we need to progress quite fast on this region of the world because of the ECB expectation for financial institutions to report on their impact and dependency on nature, how they manage those risks. So we've participated to that pilot to see actually what is the impact of natural rubber on the ground to what is material in a loan book in continental Europe, and we were able to assess what was material, the tire and automotive industry. There's also natural rubber in pharmaceuticals, etc. But for our loan book, the material part was rubber and a tire. And so we've looked at, for those corporates, if we were able to understand what were their impact and dependency on natural rubber back in Indonesia. We could find quite a lot of information around sustainable rubber, which means that they manage the impact their activity can have on the ground in any part of the world where they source their natural rubber. Thing is that, back to connecting the dot, we could not find where it came from. So, I mean, that's coming back to corporates need to assess their relationship to nature all along the value chain for us to be able to assess our exposure to impact and dependency. because natural rubber, just for those of you who don't know, is mostly in Thailand and not in Indonesia. So the proxies that we would use would not be meaningful.
Thank you, Maureen. Thank you, Emily, and thank you for the question. Are there any other questions in the room? And if so, just please state your name and association. Shona, yes.
Hi, I'm Shona Hawkes from Rainforest Action Network. Just to come back to that point, the best source of data are people on the ground. So finance is late to the party of understanding why biodiversity is an issue. And so one of the reasons that we are skeptical about a process where at the end of the day, global corporations can take advice from different parties, but they're the ones who are making the decisions. So, for example, on traceability, if financiers are going to continue to provide money to corporations without insisting on traceability as a condition of finance, they're not going to volunteer that data for you. And what we also find is that many of the times, including with task force members, I mean, I'm happy to name names, but there are cases where communities have documented incredibly extensive rights violations and environmental abuses, and they've taken them to banks and they've taken them to investors and they've said, can you act? That is the data that is already being given to companies and to banks. It's not a metric. Some of this isn't particularly complicated. And what we see is that banks or investors aren't acting on that data as well. So I guess just in the context of the discussion on reporting is what's being reported and what matters. Something like failing to disclose if a community has made a complaint about a company's environmental violations, I find it very hard to understand why that's not in TNFD. Something that investors want to know, it's important to communities, it should be important to companies. And similarly, I would also like to invite the people in this room to also take a step back and think about what you're contributing to this discussion here. Reporting is important. Reporting is particularly important for complex issues. But at the end of the day, one of the huge challenges that we face is the impunity of the financial sector. There are virtually no rules that people can take to hold banks or investors who are financing bad things to account, which hurts everyone. It hurts the market, it hurts everyone in the sector. It's perfectly legal in many jurisdictions for a bank or a financier to finance a company that is acting illegally. Environmental regulations in many practical contexts don't extend to the financial sector as well. So when we're raising concerns about TNFD and the process around it, particularly when it is being put forward as a model for governments and regulators to pick up, which we don't think is a legitimate process for something which has been written by a task force of global corporations. I just wanted to say they're not spurious claims. We're not saying these things to make trouble. Most people, particularly Indigenous peoples, women's organisations, grassroots communities, they have absolutely no idea what this is. And the people who are doing the most to protect nature and biodiversity don't understand a so-called solution, then they haven't been included in the process in a meaningful way. So it's more a reflection than a question.
No, well, thank you, Shona. I think that this inclusion point is critical, given the stewardship and the livelihoods are at the center of why often nature is being degraded in the first place. Just, Gilles, I'd like to come to you in the first instance just to speak about your experience of having that process of inclusion and reporting and accountability in all of your work.
Thank you, Grant, and thank you for this question. I think it's on the importance of listening to absolutely all segments of society and all impacted communities and territories. I mean, I couldn't agree more. Then the way is, how do we do it systematically? When your mandate as a public bank at national level or international level is to finance, infrastructure and quite impactful stuff, but that has general interest at its heart. We take huge precautions in listening to everyone, and we have indeed, long consultation phases of local communities, of indigenous communities when they're involved, of looking at obviously all kinds of impacted populations, all kinds of impacted ecosystems, services, species, habitats, etc., etc. So I think the dialogue is there, and our experience is that it's definitely crucial to take the time, the attention to slowly shape, the optimal project together, especially when it's about, general interest and so on. So our experience is that it's not lost time, effort, and money to listen to everyone. That's what I could say. It's a bit of a general statement, but there are a number of quite formalized procedures, basically, to really take into account the voices of everyone, and we are more and more attentive as nature positive, carbon neutral, etc., gains, the sort of general public attention of reputational risks, so everybody is very careful beyond biodiversity data, beyond all that on these issues. So I think it's definitely a space that we have to be very attentive to in our data collection, in our processes of investment decisions.
Thank you, Gio. And with an eye on time, I think just maybe the final comment from you, Emily, on that, in terms of inclusion.
Yeah, thank you so much, Shona. And I want to thank both the previous speakers because their feedback has continued to be fed to the task force and has pushed our ambition. So you can see the progression in our releases of the feedback we're receiving through our open innovation approach, pushing the task force's thinking and progression. And we continue to welcome all that feedback over the next year as we finalize it. So please keep this feedback coming. I wanted to mention again, all of this feedback has been coming to the task force, and we published a paper on societal dimensions, and it highlighted 4 themes that are coming through from the feedback. One is the importance, with the previous speakers, of human and environmental rights. The second is around an equitable and just transition. These are themes that are relevant to nature-related risk management and disclosure. The fourth is around access and benefit sharing. And of course, we're here with the Nagoya Protocol, where that's highly relevant to the CBD. And the fourth is what I previously mentioned, which is that all the evidence of the strong stewardship role of indigenous peoples and local communities for nature and their traditional knowledge. And the task force has taken very seriously these 4 themes and incorporated much of that thinking into the framework, but there is still much more to do. The concrete next step that the task force intends to do, and I welcome Shona and the previous speakers' input to help us do that, is to think about how we make additional guidance around stakeholder engagement in particular, because stakeholder engagement runs as a runner across the LEAP approach, which is part of the TNFD framework, and we have added a new disclosure recommendation, which would require disclosure to describe the quality of your stakeholder engagement process. And we are drawing on all the best that is out there. I welcome people's thoughts on what is best, the UN guiding principles and the OECD guidelines in particular, to try to reference what's the best about there. We're not going to start from scratch. There is much great thinking about human rights and engagement in particular that we want to draw on. On other issues that have been raised, we welcome feedback on how to do that in practice. We're creating a nature-related risk management and disclosure framework. We have to bound it, but continue to welcome feedback on how to do this.
Thank you, Emily. So with that, I'm going to wrap up the panel for today. I think that point at the end about the societal angle really does speak to the economic transformation that we're looking to catalyze here in Montreal, and that the panelists nonetheless today, I hope, have demonstrated that might seem like an extraordinary challenge, but that we can begin the journey, and that there are lots of reasons for optimism on the journey of assessment and disclosure. So thank you to Emily, to Varsha, to Maureen, Gio, and Vian, and thank you for your questions.